Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you're new here and enjoy today's video, definitely hit like and subscribe. I really hope you enjoyed the video and I hope you want to stick around for future ones. So hit subscribe if you do. Today the guy we're going to be talking about is the author of this book, The Dando Investor, and his name is Mohnish Pabrai. So Mohnish Pabrai is about as hardcore as they get in terms of Warren Buffett disciples. He manages currently around $1 billion. He runs very much a value-oriented fund. He invests in companies with a ridiculously big margin of safety, and he often operates with very concentrated portfolios. So his entire fund may be invested in only 2 or 3 stocks at any given point in time. And it means that his returns are somewhat volatile, but the returns have been huge over the last couple of decades now. So Mohnish Pabrai has compounded money at north of 20% a year for a long time. In his earlier years, when he was managing very small amounts of money, he was compounding at 70% per year, 70. Pretty crazy returns. But one of the concepts Mohnish talks about is something called the PE of 1 or the hidden PE of 1 stocks. So if you know anything about the PE ratio, that is basically just the earnings of a company divided by the current price. Or the other way around actually. So if a company is earning $100 and they sell in the market for $1,000, that's a PE of 10. Mohnish likes to hunt for these PE of 1 opportunities or a hidden PE of 1 opportunity. So in other words, if a company earns $100, he wants to buy the stock for $100. And there's not a lot of downside from there. If a company earns $100 a year, it's probably not going to go to $50 on the sort of stock price. So there's a big margin of safety and there's a lot of upside. There's all the chances in the world that that stock may sell for 5 or 10 or 15 times earnings in future. Or in other words, if you get in at a PE of 1, you could be looking at a 5 or 10 or 15x on your money. So pretty phenomenal returns if you can find these opportunities. They're certainly rare, but we're going to get into a couple of examples of PE of 1 stocks Mohnish has managed to find and run you through his sort of thought process of tracking down those opportunities, and also walk through some of the returns that he's generated, which have been obscenely high. So it's going to be a cool video. I hope you guys really enjoy this one, and let's get into a couple of examples. So the current PE ratio of the S&P 500, the largest index in the United States, is around 21. So to find opportunities where you can get a PE of 1 is somewhat rare and very difficult. So what I don't want you guys to do after watching this video is go into a stock screener, search a PE of 1, and then just buy everything with a PE of 1. First off, you're probably not going to find any, and second off, if you do find any, there's probably a very good reason why they're selling at a PE of 1. They've probably got declining earnings. They're probably a company about to go bankrupt, and that's what short sellers love to get into. So that's my little warning on PE of 1s, but let's get into the first example of a PE of 1 that worked out phenomenally well for Mohnish Pabrai, and that is actually Fiat Chrysler. So I'm going to link an article that actually Sven Carlin, who's also here on YouTube, I'm sure you're familiar with if you're watching my channel, he actually wrote an article around some of Mohnish Pabrai's investment strategies and particularly around Fiat Chrysler. So Fiat Chrysler is a company that owns several car brands. So they obviously own Fiat and Chrysler, as the name suggests. They also own Jeep. And at the time in 2012 when Mohnish got in, they also owned Ferrari. So what the company was looking like at the time is they had earnings per share of around $2.20, and they had a current stock price of around $4 at the time. So they were selling at around a little over or a little under actually a PE of 2 at the time. But something that Mohnish saw is that the earnings of the business, if they could execute on their business plan, were likely to be closer to around $4 by around 2019 or 2020. So he was looking a long way forward, but if the business could execute on that plan, they would be at a PE of 1 or lower if there was no change in the stock price, and that is very unlikely to happen. So if the business could execute on that plan, then there was a lot of upside for Fiat Chrysler. So one of the things that happened is the company basically did execute on that plan. So they are earning right around that figure that Mohnish had first projected today. And the other thing that happened is the business actually spun off Fiat Chrysler. So Sorry, they spun off Ferrari. So originally when Mohnish bought in, he bought into the single stock Fiat Chrysler, which owned all of these other brands. What happened a few years in is that Fiat Chrysler actually spun off Ferrari, and Ferrari started to trade as a separate entity. And what happened to the original Fiat Chrysler shareholders is that Fiat Chrysler also got given stock essentially in Ferrari. So when you look at Fiat Chrysler and Ferrari, the returns on the sort of both of those stocks combined, because Mohnish basically got shares in Ferrari for free during that spin-off. Mohnish originally invested approximately $20 million if you would just look at kind of the Ferrari component of that investment. And that $20 million turned into around $100 million. So it was about a 5x on his money. He then sold out. He wasn't as confident in the Ferrari management as he was with just the Fiat Chrysler management. So he sold out at about a 5x, about $100 million. The last update I heard from Mohnish was that at the current price, that would now be worth $180 million. But as Mohnish said, such is life. It's not all bad news when you get a 5-bagger and that's a mistake. So massive returns on that one. If you combine the Fiat Chrysler and Ferrari investment in total up front versus essentially his return as of today, he's looking about an 8x on his money. So huge returns, about an 8x over 7 years. So you know, nobody's going to complain about that. Huge returns. That's Fiat Chrysler. So let's get into the second hidden PE of one stock Mohnish was looking at. So the second PE of one, or hidden PE of one stock that Mohnish Pabrai has recently invested in, and this is actually quite a recent one. So this was a 2015 investment where Mohnish Pabrai first got into it, and that's an Indian chemical company called Rain Industries. And I'm going to put the stock chart over here. Hopefully I also did that for Fiat Chrysler, but Rain Industries has a pretty crazy looking stock chart. So it basically did nothing for a very long time. At the end of that period of doing nothing, Mohnish Pabrai got in. It then very quickly did basically a 10x. It's then dropped back down about 60 or 70%. And it's riding along at about a 3x level from where Mohnish originally got in. So he's still sitting on huge returns. He never sold at that 10x level. He had insane returns, came down a little bit. He's still sitting on a 3x. So he's still confident in the business, giving more kind of money back to investors over the future. And he's going to sort of continue to hold Rain. He actually purchased a little bit more as Rain Industries came back down and increased his position. So he's currently around a 10% shareholder in Rain Industries. That's basically the upper limit of what Mohnish is allowed to own. So that's kind of where he's sitting with it at the moment. In terms of the PE of one aspect of it, I'm going to talk in US dollar terms here because that's the figures I've got from Mohnish. But if you search the stock chart of Rain Industries, just note that that will be in Indian rupees. So the figures may differ slightly from what I'm about to say here. But essentially, Mohnish looked into Rain Industries and he saw that earnings were somewhat volatile, but they would typically land within a range of about 100 million to about 250 million US dollars per year. That was about the range, and that's likely to grow over time, but that would be the rough range that Rain Industries could earn over the next sort of couple of years when Mohnish was first getting in. And when you look at the actual stock price of, or the market cap of Rain Industries at that time, the business was selling for about $180 million. So it was, you know, if the company had a bad year and earned $100 million in profit from their business activities, they were basically selling at about a 1.8 PE. If they went ahead and earned $250 million, they were trading at substantially less than a 1 PE ratio. So not a lot of downside at all here. Even if the company doesn't execute or if earnings go down, you know, they're going to sell at a 2 PE or a 3 PE. It's not a lot of downside here for Rain Industries. So Mohnish invested very heavily. As I say, he bought about 10% of the company. He invested a significant amount of his investment fund's money. And that quickly went up to a 10 or 12x and now back down to a 3x, but he continues to hold Rain Industries. So they're still selling very cheap. That's not a stock recommendation by me by any means, but that's the second PE of one stock that Mohnish picked up. And let's get into some final kind of recommendations out of this video. So to summarize on our hidden PE of one stocks, if you can find them, they're pretty much always phenomenal investments, assuming that earnings are not going down over time. So the first caveat to that is they're tricky to find. Mohnish has been investing for 20 plus years now. He basically is a full-time investor. He has people sending him stock tips all the time. And he can only find maybe one of these every 2 or 3 years. So it's unlikely that as, hobby investors, almost like myself, I'm going to pick up these in my own research. It's just not all that likely. So the thing that I'm going to do is continue to keep an eye on what Mohnish is doing and continue to keep an eye on what other value investors are doing. So you can do that through a couple different mechanisms. The 13F filings to the SEC are very handy. So anytime Mohnish invests in a US-based company, he's going to report that on a 13F filing. So we're going to be seeing if Mohnish can buy any cheap stocks in the US, and he's recently picked up Micron Technologies in the last couple of quarters. Unfortunately, that's not a business that's really in my circle of competence, so it's not one that I've bought or anything like that, but that's the way that I'll continue to keep an eye on Mohnish. And Mohnish himself is also what he calls a shameless cloner. So if he sees a good idea that some other investor is doing, he's not afraid to just copy it. That's a way that he also picks up investments, and that's the way that he actually found Micron, and I believe that's actually the way he found Rain Industries as well. Someone sent him a very good 20 or 30 page long report. He read it, and he was basically buying Rain Industries heavily about 3 hours later. So that's some takeaways from this video. I hope you really enjoyed it, and I hope that opened your eyes to the value investing Mohnish Pabrai strategy. Very little downside, a lot of upside. He looks for these low risk, high uncertainty bets, and historically speaking, they've worked out extremely well. So hope you enjoyed the video. If you did, please hit like and subscribe, and I'll see you in the next one. Cheers.